All right, let's talk Macy's. They just dropped a Q3 earnings report that was, frankly, a blockbuster. I mean, it should have sent the stock to the moon, but it didn't. So, what's going on here? In this breakdown, we're going to dig into that exact puzzle, the massive earnings beat, why the market kind of shrugged, and what it tells us about where this iconic retailer is headed next. So, here's how we're going to break it all down. First up, we'll hit the headline numbers that really surprised Wall Street. Then we'll get into the weeds of their turnaround strategy, the one that's actually starting to work. After that, we tackle the big mystery. Why did the stock fizzle with such great news? And finally, we'll wrap it all up with our take, what we call the next call, where we'll give you a rating and a pretty interesting trade idea. Okay, let's jump right into the results. And look, I really want to be clear about this. This wasn't just a small beat. No way. This was a huge surprise. Wall Street was completely caught off guard by this one. So, just to put this into perspective, Macy's reported adjusted earnings of 9 cents a share. Now get this, the consensus on the street was for a loss of 14 cents. That's a 23-cent beat. In the retail world, that is an absolute home run, a massive outperformance. And it wasn't just earnings either. The good news was pretty much everywhere you looked. Revenue, it came in about $150 million higher than expected. But the real showstopper, the number everyone was watching, was comparable sales. That key metric that tells you how existing stores are doing? Analysts were bracing for a decline. Instead, Macy's posted positive 3.2% growth. I mean, think about that for a second. This was their best top-line performance in more than 3 years. That screams momentum. So the big question is, right, how did they do it? This wasn't just a lucky quarter. This is all about a big strategy they've been working on for a while now, something they call the bold new chapter. And Q3 was probably the best proof we've seen so far that this plan is actually starting to pay off big time. It's really built on 3 main ideas. First, they're pouring money into their best Macy's stores, about 125 of them, to really modernize the experience. They're calling it the Reimagine 125 project. Second, they're pushing hard on their luxury brands, Bloomingdale's and Bluemercury, which, attract a wealthier shopper. And third, they're just trying to get more efficient behind the scenes, simplifying how everything works. And you could really hear the confidence from management on the earnings call. The CEO, Tony Spring, he was pretty direct. He said the big changes they're making are actually connecting with customers. And when a CEO says that, it's not just corporate speak. It's a huge sign that this turnaround has legs. And the numbers back him up completely. You can see exactly where the strategy is hitting. Bloomingdale's, their luxury play, saw sales pop an amazing 9%. And those spruced up Reimagine 125 stores, they grew almost 3%, which was way better than the rest of the Macy's stores. It's just clear proof that they're putting their money in the right spots. Okay, so this is where we get to the really weird part, the central mystery of this whole thing. You've got these fantastic results, right? Logically, the stock should have shot up, but it didn't. And to figure out why, we have to stop looking at the past quarter and start listening to what management said about the next one. What management gave investors was a real tale of 2 outlooks. On the one hand, they raised their forecast for the full year. That's a huge vote of confidence. But, and this is a big but, when they talked about the fourth quarter, the critical holiday season, they got super cautious. Their earnings guidance was kind of soft. Wall Street was already hoping for the high end of their range. And their sales forecast basically told everyone to expect a major slowdown from the awesome pace we just saw in Q3. And boy, did the market react fast. As soon as that guidance hit the wires in pre-market trading, the stock fell about 4%. It tried to claw its way back during the day, but it just ran out of steam, closing down more than 1%. This is a textbook example of Wall Street being a forward-looking machine. They basically ignored the amazing Q3 and focused entirely on the worries about the holidays. But there's one more really important piece of the puzzle here. You have to remember the context. The stock wasn't exactly sitting still before this report. It was on an absolute tear, up 38% in just the last 3 months. So you could argue all the good news was already baked into the price. It was the perfect setup for a sell the news event. Even a fantastic quarter just wasn't enough, especially when you throw in that cautious guidance. So that brings us to the big so what. Where do we go from here? In our last section, the next call, we're going to pull all of this together, give you our official rating on the stock, and lay out a specific trade idea. And this is really the question you have to ask yourself as an investor, right? Do you bet on the turnaround momentum, which is clearly real, or do you listen to the warning coming from management itself about a shaky holiday consumer?
So, after looking at both sides, the solid momentum versus the risks ahead, our call on Macy's is market perform.
And here's why. The bull case is solid. You can't argue with it. Their bold new chapter plan is working, sales are growing, the luxury business is on fire. But the bear case, well, it comes straight from the company's mouth. When they say they're worried about a choiceful consumer for the holidays, you gotta listen. So for us, after the huge run the stock has already had, these two stories, the good and the bad, pretty much cancel each other out. The risk and reward feel balanced, which is why we're landing on a neutral market perform rating.
Okay, so if we're neutral on which way the stock is going to go, does that mean there's no trade to be made? Not necessarily. The most interesting play here might be to bet on the uncertainty itself. Let me show you how that could work. The whole thesis is that the market is completely split on Macy's right now. You have the turnaround bulls fighting the macro fear bears. That tension is going to snap one way or the other when they report their holiday numbers. So instead of picking a side, the strategy is to bet that the stock is going to make a big move, period. You can use an option strategy like a straddle to set yourself up to make money if the stock moves a lot, up or down after the next earnings release. Think about it. If they crush their cautious guidance, the stock could fly. If that consumer weakness is real, it could tank. Either way, a trade like this profits from the big move itself, no matter the direction.
And as always, our friendly reminder, this is not financial advice.